Hi traders, it's Crystal here from crystaltrading.net. We're taking a look at the markets, doing a little bit of analysis over what happened last week and what are we expecting from the upcoming week and probably for the month in here. Let's start by looking at the S&P 500, which as you can clearly see here continues to be extremely bullish, and ever since we have broken above 1475 and closed above those important levels, we are moving up into the 127 extension in here, which comes closely to about 1534. If you've been watching a few of the previous videos we've made, we were talking about the breakout of this level and the possibility of the market shooting higher into this extension, which comes about another 20 points higher in the S&P. So we're going to have to wait and see if that's going to happen. But I think that's where this market wants to go after the rejection from the 618 levels down below, a retest of the 382 here, and a pretty strong squeeze higher in the S&P 500. I think Dow also reached the 14,000 ever since 2007. It looks pretty strongly as well. If we go and look at it here on the monthly charts, you can see that we are right at the levels before the crash. We've had this nice reversal formation here back in the day here before the market moved now, and now we are retesting these levels. If we are moving higher above and close above this level, then I would expect a squeeze into the 127 of this entire leg higher, which I haven't measured yet, but probably comes somewhere at about 15,000. So I'm not saying that that's where we're going to go. That's what the markets like to do once they break out a level. So just kind of pay attention to that. I'm expecting a little bit of a resistance up here, obviously, but I think it looks way too juicy for the market not to test and move above the highs here at about 14 and 200. So overall, important bullish developments into the market. Some pretty good, interesting data that came out of the labor market on Friday as well, with some pretty strong revisions. And it seems that the market have forgotten those GDP numbers, which were negative for the last quarter. So it's a little bit of a mixture in here. I think that we are at important levels in both markets. They do look strong. So let's see if the bullish momentum and the risk on it's prone to continue, or if we're gonna take a breather over here. So with that, let's go and look at currency markets, and let's start by looking a little bit at euro dollar in here. And let me just quickly find the chart. There you go. So on the weekly charts, we've had pretty interesting developments ever since we have broken above this sort of neckline in here with the retest. Everybody was kind of watching this and what's going on. So we are moving higher, and we have taken the highs, the important highs down here, and the markets have reached above 127. And we have to just kind of consider this move in here, if it is a correction or if it's the start of a new bull trend in here. The markets were pretty much in a downtrend in here ever since May of 2011 all the way down here to August 2012. So probably for more than a year here, the euro was in a bearish downtrend. And now we're kind of coming back out here, and we can measure through Fibonacci tool where we are right now. And if we measure this leg from all the way up here to these levels, you can notice that we have passed the 50% retracement in here, and we are quickly moving towards the 618, which comes somewhere in this neighborhood. It's about 3840 zone. So I think that the markets are going to be attracted to this level, and it might happen over the next maybe couple of weeks or so. We might expect the markets to come back and retest this 50% and then maybe take it back up higher. But I have a pretty strong feeling that the markets are looking to hit these levels. If we go look at the monthly charts, you are noticing this last month close to an extremely bullish pin bar in here, which is only indicative of higher prices to come. And one of the first targets would be obviously the 618 level, and then the next one would be the 786, which comes at about 142. Let me just measure that exactly and see. It's at about 143.09, 143.10. It's quite a while to go until then, so it might take the markets a couple of months, 2-3 months to reach that level. But we can also be rejected at the 618. So just watch the 618 level and see what's going on up here. But the euro has been pretty bullish ever since this pin bar in here, now with this additional pin bar, and on the monthly charts it suggests upcoming strength in the euro to continue. So keep an eye on that. Let's look at the daily charts. We've had a pretty somewhat a rejection of the 3710 levels, and if you go down and look at the hourly charts, you will notice how the markets sort of reversed and moved a little bit lower in here, but nothing nothing major. It's just a small pullback, I think, in here. This can be considered still a pretty strong failure, so I would expect this euro to just turn up and move higher in here. So that's a look of the this is a 4-hour chart. It might look like a topping formation in here, but many traders have tried to short the euro here, including us a couple of times, and you just you don't get that much retracement to make a lot of pips, so it doesn't make a lot of sense. Just stick with the trend until proven wrong, and I think that's the way to go in here. Once again, these are the weekly charts, and we're looking for these markets to go higher and maybe hit the 618 fib retracement of this entire move down. All right. What else I wanted to look for? I also wanted to look quickly at dollar index in here and see if we can get, this is the dollar index, guys, and this is a daily chart, and we've been talking about this development in here, and this pretty important trend line in here that looks like it's being tested right now, and looks like the market wants to break through it. If it breaks, then the dollar will take a major hit. If it breaks and closes, then maybe we come back and retest it. If it's a failure, then expect a huge squeeze up in the dollar. But for right now, just pay attention to this trend line, because something interesting happens up here, and I think it's a very important decision for some longer term trends probably developing into the US dollar. So let's look a little bit. I'm just gonna try to zoom in a little bit here, and you can see how the market broke below these levels in here for a little bit, and you were quickly rejected up here, and we are somewhat closing through this green candle. So at least on the first test of the 79 level, the markets were rejected and we're moving higher. It might even go back and maybe retest this sort of trend line in here, which was broken, and so we might have some upcoming dollar strength maybe in the beginning of the week, and then it's really important that you watch this. If we're getting a rejection up into this trend line, then it could be all downhill from there. So from whatever the charts are saying, we are at the support in the US dollar, and if you want to take long positions into the US dollar, this will be the place to do it. But at the same time, it's really important because you need to watch this trend line. If it breaks to the downside, then there is no reason, obviously, being long dollars. So watch this dollar index as well, guys. Let's look a little bit at some dollar yen pairs in here. Sorry about this. Let's go back to our charts and see. I wanted to look at the euro yen really quick in here, and you can notice how on the weekly charts continues to be extremely bullish. We've had numerous pin bars in here suggesting more upside. On the monthly charts, I think that we are not even reaching any important fib levels all the way up to the 50%. It's at about 131.58, which is another probably 5 figures to go up there. and I think that's what the market is targeting in here. This is just the beginning of this month. Everything seems bullish. We've been bullish for 1, 2, 3, 4, 5, 6 months, and it looks like this is the February, and it's already starting looking pretty angry. We might get some pullbacks in here, and the support line would be somewhere at about 122, and you can watch maybe for retracements in here to initiate new longs, but I think the markets are looking for higher in here to about 50% retracement, which is about 131.50 zone. So just be careful and watch on that. Something interesting, we've taken a long trade on the Aussie yen in here before the weekend, and on the weekly charts you can notice this pretty strong bullish pin bars, both of them, and the break to the upside. But something interesting happens on the monthly, and just try to get this out. I'm not going to be able to get it into the view here, but let me see if I can do this really quick, guys. There you go. And I was measuring a fib level in here, and I think we're coming into a 786. I'm trying to see if it's from this leg up. Yeah. So you can notice that this entire move down that happened during the crash has been almost retraced in here, and we're reaching the 786. This is an important fib level, and the markets are testing it right now. So I would expect a little bit of a resistance up here, and maybe the markets will just stay and take a breather up here. But with this gap, the markets just look madly bullish, so it can even move higher and go up to 100 and above. So just pay attention on these developments up here. If you're long Aussie yen, the 786 might provide some strong resistance, so you might want to take profits in here. We might even get out of this trade and probably reinitiate on a pullback. Obviously, the strong support comes back into these levels. We don't know if the markets are going to come back and retest this. It's pretty far away at about 87, which is almost 10 figures down. But anything is possible. So that would be another, very good entry for a longer-term trade and trading here. I guess that's about it, guys. Here for today. That's a little bit of a look. Let's see if there is anything else that we can see. The gold, it's pretty much going nowhere. If we're going on the weekly charts, you can notice that ever since we've broken this, this upward trend line in here to this candle, the markets are probably just trying to build up here a bearish flag. So we might get some sell-off in gold here, guys. Just pay attention on that. That might maybe help a little bit with the risk aversion, if any of that it's coming to fruition. But so far it doesn't look like. Something interesting happening on the Kiwi, which I wanted to take a look. And this is by the look of this chart, I think this market is about to rip higher, and I think it's going to be one of the trades that we're going to take into the upcoming weeks, probably even the beginning of this week, once we probably break above this resistance line. If we break higher and come back and retest it, we get some support in here, then I think that it's time to go long in here, looking for much higher. You can notice how this bullish pin bar develops up here, and I think this is a pretty strong indication of a failure of the downside and more upside to come. So and if the Kiwi starts moving higher, then I think that this looks pretty good as for the risk on. The cable, it's been pretty crazy and pretty beaten up here, and I'll take a look at the cable as well, and you can see here how this is a weekly chart, and ever since we've had this huge reversal pin bar, the markets have been moving down, and now we're having the second one in here through this week, and this only suggests more downside. So if you're getting a pullback in here in the cable, I would suggest selling it, because for me it looks pretty clear that this market wants to move even lower. So pay attention on the cable, but it looks pretty upset in here on the weekly charts. On the monthly, you're noticing this huge you know, how they call this, engulfing, you know, candles, you know, on the bearish side. So you know, the markets might come back and even retest the support down here at about what was this? Let's see, I think it's 153.40.